So we have radical traders and we have conservative traders. And basically for me, there's a time to be radical. There's a time to be conservative. And this is not that time to be radical. Literally, I got to realize that this is one of the major reasons why, I've been taking a lot of, right? I'm supposed to trade conservatively. My trades are supposed to be very conservative. So what it means is I'm supposed to use the best leverage, the best capital, no rush, nothing. Now I'm just supposed to follow the market the way the market should be followed, not the way I feel. Despite the manipulation, the reason why there's manipulation is, yes, of course, we know manipulation is just there to, shake people off and everything. But the truth is, manipulation easily affects, what do we call it? Radical traders. If you're a conservative trader, trust me, you won't be a victim of manipulation, because manipulation is not a trend. I want you to understand that. So I'm going short on link. You can see the parameters, right? You can see the parameters. Now, this is the stop loss for now. But for me, like I said, I am conservatively trading this. So even if it traces, I'll just add more bags, right? So I want to use my first position. I want to use 2.5% of my capital. Right, 2.5% of my capital, which is still literally much for me on a 20x leverage, right? So that's 98 times 20, 5,960 leverage amount. So 0.025 times 5,960, 149. So if I put in 149 here, I'm getting $7.55. It's too much. I'm going to cut that by 2. So 149 divided by 2, 74.45. 74.45. Right? So this is how I want to play it. So I want to play very conservatively, which I'm already in the market for link. I'm already in the market. Now, what's going to happen is this. For me, as if the market retraces, right? If the market retraces, I'll add more position. So basically, here's what I did. Now, this portfolio, this account size is an account size of $300, right? You guys can hear me, right? So it's an account size of $300. So I multiplied the $300 by my leverage, which is 20x. Now, $300 times 20, that's $6,000. Now, normally my first margin I should go in with 5% of my capital. That's 0.05. But I've looked at it, 0.05 means I'll have to trade with 7 point something dollar from my margin and $140 something from the leveraged amount. And being a conservative trader, I know how conservative trading works, right? Knowing fully well that these markets could still be manipulated. Manipulation does not change anything about the prevalent trend. I want you guys to understand this, right? The fact that they are manipulating the market is just so they can make more money out of people's lack of patience, out of people's lack of, emotional management and all that. But the truth is the trend remains the same. The trend does not lie, it doesn't fail. And what's the trend? The trend is still bearish. It's still bearish. So what's going on right now is just correction, retracement, and manipulations. But it doesn't take away the fact that the trend remains the trend, right? So I'm not going to explain elaborately what I'm just saying now, but I'm just trying to get you guys to understand that when I trade, right, I have principles that I got to stick to. And it's because I'm not been sticking to those principles. That's why my trades have not been literally aligning for a long time. Not for a long time, actually, for a very, very short while, right? So this is not the time to be radical. This is the time to be conservative. In fact, I think I'm going to make a documentary on my journal probably tomorrow, as soon as I wake up. I'm going to document this experience yet again. There's a time to be radical in the market. There's a time to be conservative. When you need to be radical is when you're too sure. For example, if we enter a bull market, and let's say we've entered a bull market and you are not privileged enough to see the bull market early enough, you can go radical because you're sure of the trend. At that point, at least it has not started being manipulated and all those stuff. But in a situation where the market is dicey, there's manipulation, there's a whole lot of stuff going on. Now, I was telling someone today, before I stepped out, that what the market now is doing currently is the market is now doing opposite to what the analysis is saying. So it is more like, if you want to win the market, after doing your analysis, if the analysis is showing you short, if you want to win the market, you go the opposite direction of your analysis, which is totally wrong. It's not supposed to be like that. The analysis is supposed to win at all times. Analysis is supposed to win at all times. But because of the fact that we recognize that there is manipulation and these factors exist in the market, we literally just have to, play the market no longer by chart. We now have to play by psychology. Because I literally have studied it for a while now. I literally have been studying it for a while. And I've noticed that, okay, we finish an analysis. This is supposed to go short. We are too short. But because we are in a season where the market does not go by analysis, it doesn't go by the chart, right? It's not going according to reverse psychology. So it means after drawing the chart, I should go the opposite way. Now, as good as that sounds, it is very risky, highly risky. And why is it highly risky? Because eventually the trend prevails. Eventually, the trend prevails. So in a case or in a scenario where the trend prevails over the manipulations, you will be literally done for. Yes, I can assure you that it's better I fall victim to manipulation, right, than I be a victim of the trend. Literally, it's better I'm at the mercy of manipulation than I am at the mercy of the trend going against me. Because eventually, if the trend goes against you, you're done. Literally, I can assure you're done. All right.